Well, thank you for coming into the Rich Girls Don't Work, Jonathan. I am so excited for you to be here because, like I have been telling my guests, there is a way you're going to be able to use that digital product money to either buy your first home or your first investment property. And I am so glad that we have you on the show today.
Well, thanks for having me. I appreciate it.
Yes. And you
Excited to
guys,
be here.
And you guys, we are going to dive right into it. If you thought that you were not able to go ahead and purchase with your digital products, you thought wrong. On this channel, we are an investment group, and we have the lovely Jonathan Bloke from Neighborhood Loans, and he is going to show us exactly how to do it. Jonathan, we're going to dive into it. The first thing that my viewers would love to know about is how do we do it?
First, you got to reach out to a mortgage professional, preferably myself at Neighborhood Loans, and I can walk you through the steps on how to get pre-qualified. So that will entail what personal documents we need, and then what programs you'll qualify for, which at the moment we have multiple programs out there, whether it be FHA, conventional, there's VA, there's USDA, and then within those programs, we also have down payment assistance programs.
Hmm. Well, one of the things that my viewers want to know, what program do you think would best suit them when they have all of this money that comes from digital products? Because, like I said, we're looking to invest our money, and I know the best way to do that is through real estate. That is the best way to do that. So, is there a particular program that they are able to go to, or could you name a few programs that they're
Sure.
able to do?
Yes. So yeah, the most popular programs when purchasing are going to be FHA financing. Okay, FHA financing has a minimum down payment requirement of 3.5%, and then conventional financing has a first time buyer minimum down payment of 3%. And if it's second or third time or multiple than that, it is 5% down. Those are the two most popular programs to purchase a property with.
Okay. And then there's one program in particular that I was looking up. I don't know if this works for us or if it doesn't, but how about the bank statement program?
Great
Or bank
question.
statement mortgage, because that's one of the ones where, if I'm not mistaken, you're able to get pre-qualified simply off of your bank statements. So could you let us know a little bit about that and how does that actually work?
Yes. So the bank statement program is there's a couple within itself. So there's a 12-month bank statement program. So what happens is we view the last 12 months bank statements. Okay. We calculate how much the deposits are on a monthly basis. And then we have a form that gets completed by the business owner to figure out exactly what their monthly expenses are so we can calculate the accurate income of it. Okay. Then we also have a 24-month bank statement. The 24-month bank statement is a little bit more favorable when it comes to interest rate and terms because the business has been in business for longer than 12 months. So we do the exact same thing as far as the calculation with income and the cost of doing business. Once we have that monthly debt to income ratio, then we can give a full pre approval. It's pretty much all it is. Minimum credit score is 660.
So are there any requirements or anything? What are the requirements to go into that particular program? And how can one get themselves ready either for that program or for, say, FHA, say, conventional? How would you be able to get yourself mortgage ready?
Sure. So getting mortgage ready is trying to keep your debts at approximately 30% of the allowable limit. Okay. We want to save as much money as possible because we're going to need a down payment. Okay. And then as far as credit score, like your credit score to be as high as possible. But The score requirement for FHA is a 580 and above, and the score requirement for conventional is 620 and above. So saving reserves, which is assets, keeping your debts at a 30% ratio from the limit, and then trying to have your scores at the minimum of the minimum requirement, which is 580 FHA, 620 conventional. So that would be the best way to get yourself mortgage ready. And a lot
Okay.
of people today are mortgage ready and they really don't even know it.
So, what are some examples that you have had where people that were actually mortgage ready but didn't know it? Like, didn't like, what were some examples where they were like
Got a
mortgage
ton of them.
ready but
Yeah.
didn't take that chance? Like, give an example.
So most people are nervous that because they've never owned a home that they might not even qualify for it. Okay. That's number one. You don't have to own a home in the past in order to purchase another home. Okay. So having a job and making money is very, very good. Okay. Um, a lot of scenarios is people who are CTA drivers, police officers, CPS teachers. Um, there are multiple avenues of jobs where people work and they've been there for 2 years and they have a little bit of savings but think that they need 20% down. They've got a few credit cards, their credit score is somewhere between the 680 and 720, but they don't think it's just high enough yet. Those are the perfect scenarios, and I come across those honestly every single day, to where I get introduced to a new client saying, hey, they're looking to purchase, they're not sure they're ready yet. I do my credit check, I go over their income, I go over the assets, and I issue a pre-approval. And I've had so many times where clients called me up crying, going, I'm so excited. I didn't think I was ready. And they are. It really doesn't take a whole lot, but you really have to get out of your comfort zone just to find out if you can get pre-approved. And the best part about it is if we can't get you pre-approved, I can give you that path and time frame of how long it will take us to get pre-approved.
And I absolutely love that because sometimes we don't feel like we can actually do it. And
Yeah,
I love how hands-on you are because we've had a lot of clients together that
sure.
we have literally helped and they didn't think that they were going to get it. And like I said, I sent them to you and they were shocked, amazed that they were able to actually get their mortgage.
Yes. Yep.
But that's the great thing about it. So, how is that program, the bank statement program, different from traditional programs?
Great question. So the bank statement program is going to qualify you based off of the average deposits into your business. Okay. Um, a lot of times when we're doing a self-employed borrower, we go off of the tax returns. But a lot of self-employed borrowers write a lot of debt off, which reduces their total net profits for the end of the year. Okay. Um, that really puts about 50% of self employed borrowers in the ineligible section of being able to buy a home because they may have had a lot of expenses for their business or it was a startup business, and all of those write-offs reduce the total income. So with the bank statement program, it's going solely off of the amount of deposits. So for instance, if a business makes $500,000 gross and they write off $400,000, their net profit is 100 grand. Okay. With the bank statement program, we're using all $500,000, showing the deposits into their business bank account. And then what is reducing from there is just their cost of doing business. So it really gives a lot of extra income to their buying power.
So, how do they get in touch with you if they would like to prepare to be mortgage ready, or if they believe that they are already there?
Yeah,
How can they get in touch with you?
perfect. Well, I will put on this link the link to my website. Okay. It will have my name, my phone number, my email address, and it will have the link to my website. Okay. The link to my website will bring them right to my mortgage application. They'll be able to input all of their information into my mortgage application. As soon as they submit, it will send me an email right away. If they want to ask me questions and have a consultation first, my phone number and email address will be on there. So they will be able to contact me directly to my cell phone. It's the only number I use.
So you're not just licensed in Illinois here with me, but you're actually licensed in how many states?
48 states. Neighborhood Loans is licensed in 48 states. So we can do business in 48 states. And I will send you a map that you can post up here to let everyone know what states we're licensed in. There are very few that we cannot do business in.
So, Jonathan, what is the time frame from once they are pre-approved to actually closing on the home?
Awesome question. Yes. So my pre-approval process takes less than 24 hours. Typically, I'm on a 2 to 4 hour turn time to get you fully pre-approved. Once you're pre-approved and you go under contract on a home that you've seen, viewed, and got an accepted contract on, my average close time right now is 23 days. So just slightly over 3 weeks, and you will be a homeowner.
Oh, in less than a month, you're telling me
Less than a
in
month.
less than a month, you're
Yep.
going to be able to close on your home.
Yes. And Sam, let me tell you. So that is the biggest surprise that most people have is once they're pre-approved, it becomes very, very real and it goes very, very quick. Because then when you're laying down in bed and you're looking at homes and you find something that you like that fits the pre-approval that I gave you, they're immediately texting their agent, hey, can I go see this property? Can I go see this property and that property? The process happens very, very quick, becomes very, very real, and the excitement just grows.
Wow, that's amazing. Like under a month.
Under a month.